Hey everyone, how's it going? Happy Thursday. Hope everyone's doing good. Oh, interesting. BIA is up after hours. This is one that I've shorted a couple of times. Could be an interesting one. So, a couple of updates. One, I withdrew everything from my big trades account. I clocked in about $500 of profit in the last month, so that was pretty cool. But obviously, I was trading on the web version. Once you go DAS, it's really hard to go back. And if you don't know what DAS is, it's the best trading platform out there, but it is also very expensive. So yeah, I'm kind of taking a pause on that because I kind of want to explore cryptocurrency trading and see if some of the edges that I found actually hold up in forward testing. And also the barrier to entry is lower. It's about 1,200 instead of the near 30,000 it would cost plus $500 a month. For data fees and API fees if I were to deploy the algorithmic trading strategy. I am in contacts with DAS about paper trading. It would cost me around 200 a month, but at the same time, it's like locate fees aren't there. So I'm still forward testing, accumulating, and I was thinking about wiring alerts to be sent to the Discord based on like the criteria that I found for those variants that I found for trading. So we'll see how that goes. If that didn't make any sense, basically, I'm hoping to get live alerts in my Discord channel for the shorts that I would take that are based on the algorithmic trading strategies that I've worked on. In other news, I do have a long strategy now. I'm still back testing and forward testing it. So we'll see how that goes. I'm really excited for it because there is no barrier to entry there. Like I could just add money to my Schwab account and trade through the API. So if that holds up, then that could be super exciting because then it's like I have profit coming in for paying for DAS. In other news, it looks like SpaceX did break that support level I was talking about of 150. It seems to be selling off now. I was really contemplating opening a short at 140. I was going to sell a credit spread, selling the 140 put and buying like the 145 put the call for protection. Missed the entry. I was also like, you know what? SpaceX is kind of like, you just never really know like what could happen with, it gives me like meme stock vibes. So I don't really know, but I do think it's leaning bearish now that we broke support. So an interesting short play. I would say like 3 month, 6 month horizon short play could be the move here. I think that if it were to retest, that would be a really good short entry, but I honestly don't know if it will happen. I feel like Oracle is pretty beaten down right now for no real reason other than crazy expenditures. It's been following this crazy red day pattern for quite a while. There's lots of outflows coming in here, but I would think that once it starts forming support, it could turn around. I like this for like a 1 to 3 year play. If you could withstand the drawdown and like no performance for that time, I feel like the RR is really good. Like we're looking at a 2x just from what is this, about a month ago. So pretty crazy sell off. Next, we have IBM. IBM opened down after their guidance about how they didn't really adapt to the changing market conditions, let's say, with AI and everything. They did have a pretty decent update today, but I do think that this sell off is pretty insane given it's IBM. So IBM and Oracle, I think, are pretty decent fundamental buys right now. That being said, there's probably going to be other assets or equities, I would say, here in this context that'll outperform those two in like the short term. But I think this could be another like 1 to 3 year hold. The only thing is, I think the RR isn't really there as much as it is for Oracle. Looking at Bitcoin now, we saw a slight rejection today on the 65K level. It probably will be range bound for a little bit, but I'm still accumulating as I have been. It bounced up pretty handsomely from the 60K level, so I think that it'll probably hold that support. I am waiting for it to break that support to do another big lump sum, but I just added about 1,000 in exposure today to bring my cost basis down a little bit because I've been accumulating since the 120,000, just like a daily investment. So I've been riding this wave all the way down, and my average is at around 80K. So I dumped in another grand here. I also dumped some in during this sell-off too, and I'm just holding right now. So I think that another leg down is very much possible. I would assign it like probably like a 30-40% chance of happening, but there's always that chance it doesn't, and you're not picking up at these price levels. So if it just skyrockets from here and we enter the bull market, it doesn't dip below 60K for the next months. You want to still be getting exposure at those prices. So that's why I've kept my DCA where it is. If we bounce up to around 70K, I might take off some exposure, maybe like drop it from like a 3.5% allocation to like 3.25 or something, just so that I could buy in lower if it gets there. But I'll probably keep my DCA as is. It's strictly like rebalancing if we make a decent push up to 70 and 75,000. As far as the tracking goes for the penny stock strategies, I flipped this to N greater than 10. We have some pretty interesting strategies here with high win rates. A lot of these symbols are overlapping. These are just sister variants, siblings per se, that have greater filters applied. So yeah, I'm super excited to see kind of where this goes. Obviously, we've got a good amount of N, like this one has 24 samples, but this is just back testing, so we're still tracking forward. I'd say when N gets to around 100 and 200, that's when it's truly actionable. If we look at stuff that has greater than 50 N, we really just have a couple strategies that have positive equity curves. The net real comes down to implementing costs related to it. So it could be commissions or borrow fees that are assumed. It's not really live true fees. So it's a little bit overstated, and I was ripping some Claude code to figure out why it's so high in some scenarios and made some adjustments. I just don't know if it was fully back tested. So we'll see, because we have strategies like this that have a good cumulative ROI, but this is based on the gross, right? So we'll see what happens. If we look at samples with 30 or greater, we have some better looking strategies here. I think the most interesting one is this one, because even after net, we're looking at 1% per trade with a max drawdown of 16%. So pretty good. 88% of the last 10 trades were wins, 50% win rate. But obviously the number of days and number of trades is still premature to promote it as a variant. I've added a trade log to see the actual live trades that are being filled as well. And it's pretty cool to see like how much I would make per trade, right? So we'll see how this all goes, because ideally we'd have like a variation of maybe like a portfolio that has a couple of different strategies that are uncorrelated but both perform well, and then you could essentially start stacking the ROI. On the cryptocurrency front, there's not as much interesting here. I'd say like by ordering these by trade count, you can see there are some that are performing well, but most of them you'll see have a pretty crazy return to the downside. And when trying to flip these, a lot of time you get eaten up by fees, and it doesn't actually really help at all. I might actually look at this one because this is kind of insane. 75% return to the downside could definitely be flipped, even this one. But we'll see what happens. As we go down the list, there are some green ones. And same kind of deal here. I would say like if I could put together a bucket of strategies that perform well and are uncorrelated, then you could actually have a pretty good return. The problem with stuff like cryptocurrency trading is the spread, slippage, and liquidity are all going to be a little bit different and kind of hard to measure. And also I'm piping into this with a VPN. So it's kind of hard to fully trust it and rely on it. There's obviously third-party risk as well, like Hyperliquid as a project could get hacked and stuff like that. So it's always going to be a little bit riskier, but the barrier to entry is a lot lower. As long as I could find something that's actually worth actioning on, then it could be successful. So anyways, that's it for today's video. If you guys have any questions about anything or would like to do this for yourself, please let me know, leave a comment. I plan to release a website with some free resources. I'm still working on that. And I also plan to talk about just general market news more. So those are kind of in the pipeline, but for the most part, I've just been back testing and going through looking at trades and seeing how we could adjust so that maybe, just maybe, we might be able to extract some alpha from the markets algorithmically. So yeah, thanks for watching. Hope you enjoyed, and peace.